San Diego just had a 25-year high in apartment deliveries. And right now, there are more than 12,000 rental units available across the city. Luxury towers downtown are offering incentives, free rent, move in specials, reduced deposits. And yet, somehow, housing still feels completely unattainable for huge portions of the population. So, what exactly is going on here? Because people look around California right now and something it just feels off. Cranes are everywhere. New apartment projects are everywhere. ADUs, accessory dwelling units, are exploding across neighborhoods, and people are leaving the state, yet prices still feel crushing. I don't think California's housing problem is as simple anymore as politicians, developers, or headlines make it sound. Because I don't think California only has a housing shortage anymore. I think increasingly California has a housing mismatch problem. And I think that disconnect is exactly what people are emotionally reacting to right now. Something about this no longer feels economically coherent. So let me give you the actual numbers because this conversation deserves them. Statewide, California has averaged roughly 100,000 to 115,000 net new housing units per year over the last 5 years. In 2025 alone, the state delivered 115,000 new units. Over 5 years, California produced somewhere between 530 and 550,000 new homes. That sounds like a lot until you look at what California actually needs. The state's own housing department says California must build 2.5 million homes over the next 8 years. That's approximately 312,000 units per year, and we are about to hit one-third of that target. San Diego County delivered roughly 55 to 60,000 new housing units between 2021 and 2025. And 60% of those are multifamily. Inside city limits, that number climbs to 66%. Single-family homes are no longer the dominant product being built here. The market has structurally shifted. San Diego built roughly 3 new housing units for every 4 new residents over that same period. That's not surplus, that's not relief, that's slowly closing a gap that's been widening for decades, which is why prices have softened slightly in some segments, but haven't corrected meaningfully here in San Diego. Basically kind of level this past year. And yet, with all of that construction, only about 11% of San Diegans can actually afford the median price home right now. The current median home price in San Diego is hovering around $1.75 million. Some estimates now say you need to earn roughly $221,000 a year to comfortably qualify for that home at today's market interest rates, which are roughly 6% to 6.25%. Meanwhile, the median household income in San Diego County is around $95,000. That's not a small gap. That's an enormous structural disconnect between what housing costs and what ordinary people realistically earn. And that's the contradiction because people look around and think, wait a minute, if we're building this many housing units, why does nobody feel relief? And that is a fair question because not all housing is behaving the same way right now. So what does that mean? Well, this is where the conversation really becomes interesting because some luxury apartment segments downtown are reportedly seeing vacancy rates between 10 and 12%. And there's something driving those vacancies that almost nobody is talking about: parking. A significant number of these new luxury towers were designed around the assumption that residents would use mass transit. Reduced parking, some with no dedicated off-street parking at all, that's the new San Diego. People are not going to give up their cars. And meanwhile, older Class B and Class C apartments, the more affordable workforce housing stock, remain incredibly tight in their vacancy rates. Some reports show vacancy rates around only 2.5% for those units. That single statistic may explain this entire California housing conversation better than almost anything else. Because the problem may no longer simply be, do we have enough units? The problem increasingly becomes what kind of units are being built and who can afford them and where do they park? And so this is where I think California's housing conversation becomes deeply emotional because for a lot of people, this no longer feels like a normal housing market cycle. It feels like the middle class is slowly drifting further and further away from home ownership. People making six figures still feel squeezed living in San Diego, and 20 years ago that would have sounded insane. In most parts of America, earning six figures still feels financially successful. In coastal California, a lot of people making good money still feel financially anxious a lot of the time. Recent surveys show nearly half of Californians have considered leaving the state because of housing costs alone. And the average age of first-time homebuyers keeps climbing higher and higher. And that matters psychologically because homeownership used to feel like a normal milestone of adulthood. Now, for many people, it feels increasingly out of reach. Doesn't seem fair. Insurance costs are exploding. HOA fees are also going up. Utility costs are rising. Construction costs are skyrocketing. Interest rates have doubled. Property taxes are high. Meanwhile, the entry point into homeownership keeps moving farther and farther away. California now has one of the lowest homeownership affordability rates in modern state history. So when people hear we just need to build more housing, many Californians look around and ask, build housing for who exactly? And to be clear, San Diego is not alone in this. Orange County affordability is hovering around 10 to 15%. Riverside County is closer to 28%, which is more balanced. And that gap matters because it helps explain why so many Californians are making painful trade-offs right now between affordability and quality of life, which we talk about all the time on my channel. San Diego remains one of the most desirable coastal markets in America, but increasingly it's becoming accessible primarily to people with unusually high incomes, significant equity, family money, or locked-in low mortgage rate. Now let's talk about who is actually moving in and out of California, because this is where the mismatch story gets concrete. The people leaving are disproportionately working and middle class families. Priced out, fed up, done. During the pandemic peak, California lost a net of 322,000 residents. Between 2020 and mid-2025, roughly 1.3 million people left California for other states. The people arriving through international migration and high-earning corporate relocations often have significantly higher buying power. And developers don't build for the people who left, they build for the people who showed up, which is how you end up with a city full of luxury towers and a workforce that can't afford to live in them. But San Diego County, still growing, still one of the fastest growing counties in California. California did underbuild housing for decades. That historical reality is a fact. And there's another massive issue that almost nobody talks about, the lock-in effect. Roughly 77% of California homeowners currently have mortgage rates below 5%. So people aren't selling. Why would they? Someone sitting on a 2.5% mortgage from 2021 could literally double their monthly payment by moving. So resale inventory remains incredibly constrained, even though it feels more like a buyer's market here. And in San Diego specifically, people aren't living alone because they prefer it. People here are sharing housing because they have to. House shares, roommates, multi-generational households. Cost-driven doubling up is how enormous numbers of people do survive in this local market. And that pressure doesn't show up cleanly in headline statistics. So yes, California still has supply constraints, but supply alone may no longer solve the problem. Affordable supply, that's what we need. And this is where California has quietly started experimenting with a completely different housing model. ADUs, or accessory dwelling units. Backyard cottages, garage conversions, small detached units woven into existing neighborhoods. Unlike the giant luxury towers, the ADUs create smaller, more flexible housing inside neighborhoods that already exist. And California has been aggressively changing the laws to accelerate this. SB 1211 now protects multifamily property owners to build up to 8 detached ADUs on qualifying properties. AB 2533 allows many unpermitted pre-2022 ADUs to finally become legalized, and SB 543 requires cities to approve many ADUs within 60 days. AB 1033 creates pathways for some ADUs to actually be sold as separate condominiums. That's a major shift. but it's not a magic solution. And many ADUs are still renting at above moderate income levels. And many ADUs in San Diego sit vacant for a reason that has nothing to do with price. No off-street parking. We talk about it all the time. Build a backyard cottage with no parking in a neighborhood where street parking is already gone, and you're going to wait a long time for a tenant. Just a fact. So the question becomes, does California simply need more housing? What do you think? Or does California specifically need more attainable, functional housing? If you're renting right now, this may actually be the strongest negotiating environment luxury renters have seen in years. If vacancy rates downtown are sitting around 10 to 12% in some segments, use that leverage. Ask for incentives. Ask for reduced deposits. Ask for concessions. If you're trying to buy ADU eligible lots, small multi-unit properties, townhomes, properties with income potential, those are increasingly the bridge into ownership for many Californians. I'm working with a buyer right now who's looking for triplexes so they can do that house hack. That'll make her payment around $3,000 to $3,500 a month, and she'll control a triplex worth $1.5 million to $2 million. If you want to talk about this type of house hack, pick up the phone and give me a call. We'll talk about it. And if you're an investor, watch downtown San Diego, Mission Valley, and the higher supply corridors carefully over the next couple of years. Softening is real in certain segments, and this is when patient money gets rewarded. If you're thinking about making a move, buying, selling, relocating within San Diego, please pick up the phone, give me a call. I do answer my phone. You can also book a call through this link with me directly, or you can download my free relocation guide in the top pinned comment or by scanning this QR code. So on to our question of the day. Do you think California primarily has a housing shortage, or do you think it's increasingly becoming an affordability and housing mismatched crisis? I genuinely want to hear where you stand on this, because I think this conversation is only getting bigger. I know around here it's getting really big. So drop your answer in the comments below. And maybe that's why this conversation feels so frustrating for so many people right now. California is building. The cranes are real. The projects are real. The investment is real. And yet for millions of people, homeownership is still farther away than ever. So maybe the question isn't just whether California is building enough housing anymore. Maybe the bigger question is whether we're building the housing people actually need. And I don't think California has figured that answer out yet. Do you? Okay, that's enough California housing chaos for one day. Thank you for staying till the end. I appreciate you guys. And stay sunny, San Diego.